What's going on, everyone? Welcome back! I've missed you guys so much. You are my YouTube family, and as you can see, the channel has changed. The new name is called the Investment Vault. So I'm going to be teaching you, yes you, how to start making some money. Everyone has made mistakes, including myself, but it's never too late to start changing, and today's the first day where me and you lot start getting a bit more business savvy. So the first video what I'm doing today is 7 ways how you lot can start investing your money from today, baby. So please, let's go on this journey together. First of all, by smashing that subscribe button, give me a thumbs up. Let's get to work, baby. For many people, the word investing conjures up images of men in suits monitoring the exchange of millions of dollars on the stock exchange. Well, I'm here to tell you, you don't need to be Wolf of Wall Street to start investing. Even if you have a few pounds to spare, your money will grow with compound interest. The key to building wealth is developing good habits, like regularly putting money away every month. Swap out the barista-made cappuccinos for coffee at home, and you could already be saving more than £50 a month. The first way is trying the cookie jar approach. Saving money and investing it are closely connected. In order to invest money, you first have to save some up. That will take a lot less time than you think if you can do it in small steps. If you've never been a saver before, you can start by putting away just £10 a week. That may not seem a lot, but over the course of a year, it can work out over £500. Look guys, just put £10 in an envelope, or a shoebox, or even a small little safe, or even that legendary bank of first resort, the cookie jar. Guys, honestly, you may be tempted, but just don't touch the cookie jar. Well, if you're already one step ahead of the cookie jar and you've got some money put away, we're jumping on straight to number 2. Try your hand at the stock market. When it comes to investing in the stock market, cost is often the barrier to entry. It takes money to make money, right? Not anymore. The internet has made it easy for customers to get started with very little money up front. That means you can put a few pounds in to familiarise yourself with investing before making a bigger commitment. It's a great way to learn about investing while putting very little money at risk. Today, there are increasing numbers of options that have swung open doors to a new generation of investors, letting you get started with as little as £1 and charges no trade commissions. In the past, stockbrokers charged commissions of several pounds every time you bought or sold stock. That made it cost prohibitive to invest in even a single stock with less than hundreds of thousands of dollars. In fact, £0 commissions across comp have been so successful they've disrupted the entire investing industry and forced all major brokers, from ET Trade to Fidelity, to follow suit and drop trading commissions. Now let's jump straight to number 3, which is dip your toe into real estate. Believe it or not, you no longer need a lot of money to invest in real estate. A new category of investment, known familiarly as real estate crowdfunding, makes it possible to own fractional shares of large commercial properties without the headache of being a landlord. Crowdfunded real estate investments require large minimum investments than robo-advisors. For example, £5,000 instead of 500 quid. They're also riskier investments because you'll be putting the entire 5,000 into one property rather than a diversified portfolio of hundreds of individual investments. With Fundrise's really easy to use online platform, You simply need to start with an investment of £500. So, if you're an uncredited investor, you can buy properties without paying those large fees that end up being a deal breaker if you want to start dabbling in the real estate. By managing your own portfolio, the fees come to just 1%, and Fundrise always offer 90-day satisfaction guarantee. Don't worry guys, I'm going to put a link of their website in the description below. Rule number 4, enroll in your employer's retirement plan. If you're on a tight budget, even a simple step of enrolling in your pension or 401k or other employer retirement plan may seem beyond your reach. But you can begin investing in an employer-sponsored retirement plan with the amount so small you won't even notice them. This is one step that everybody should take. For example, plan to invest just 1% of your salary into the employer plan. You probably won't even miss the contribution that small. What makes it even easier is that the tax deduction that you'll get for doing so will make the contribution even smaller. Once you commit to a 1% contribution, you can increase it gradually each year. For example, in year 2, you can increase your contribution to just 2%. Year 3, 3%, and so on. If you time your increases with your annual pay rise, you'll notice the increased contribution even less. It will effectively be splitting the increase between your retirement plan and your checking account. And if your employer provides a matching contribution, that will make the arrangement even much sweeter. So guys, it is so important. Start investing your money today into your retirement plan, your 401k, or any type of scheme that's going on. Rule number 5, put your money in low investment mutual funds. If you're thinking about entering the world of stocks and shares for the very first time, you might be concerned about which companies to invest in. The good news is that mutual funds remove the need to choose individual shares, as the provider in question will buy and sell stocks on your behalf. In return, you will need to pay just a small fee, which is usually less than 1% per year. Automatic investing is a common feature with less mutual funds and ETF IRA accounts. It's less common with taxable accounts, though it's always worth asking if it's available. Mutual fund companies that have been known to do this include Dreyfus, Transamerica, and T. Rowe Price. An automatic investment arrangement is particularly convenient if you can do it through payroll savings. You can typically set an automatic deposit situation through your payroll, in much the same way as you do with an employer-sponsored retirement plan. Just ask your Human Resources department how to set it up. Number 6, play it safe with Treasury securities. Not many small investors begin with their investment journey with the US Treasury securities, but you can. You'll never get rich with these securities, but it's an extremely safe place to park your money and earn at least some interest until you are ready to go into higher risk factor investments. Treasury securities, also known as savings bonds, are easy to buy for the US Treasury's bonds portal, Treasury Direct. Government bonds or GLITs are an investment product in the UK that are positioned somewhere between shares and cash in terms of risk. Known to be less risky than often the volatile share market, government bonds can be an attractive investment or trading opportunity for customers who are less risk tolerant. A government bond is a type of debt-based investment where you loan money to a government in return for an agreed rate of interest. Governments use them to raise funds, so that can be spent on new projects or infrastructure, and investors can use them to get a set return paid at regular intervals. And lastly, number 7, premium bonds. Premium bonds are an investment product issued by the National Savings and Investment, NCNI. Unlike other investments where you earn interest or regular divided income, you are entered into a monthly prize draw where you can win between £25 and £1 million tax-free. How good does that sound? How do premium bonds work? First of all, you need to invest just at least £25. You can keep buying bonds until you reach the maximum holding level of £50,000. you get a unique bond number for every £1 invested. So if you save £100, you'll get 100 bond numbers, each with a chance to win a prize. Once held for a full month, bonds are included into a monthly prize draw, and you can stand a chance of winning a huge cash prize. You can buy them for yourself or on behalf of your child, grandchild, or even great-grandchild. You have to be aged at least 16 to purchase premium bonds for yourself. So everyone, to finish it off, I'm going to save the best till last. But this sounds a little crazy. You can leave your money with a robo-advisor. So guys, if you're not very skilled at investing on your own, you might consider hiring a robo-advisor. Robo-advisors are investment companies who create automated software designed to manage portfolios based on a certain criteria. For example, when signing up for such a service, you might take a questionnaire to determine your risk tolerance level or investment goals. Robo-advisors make investment management available to the masses since they typically have very low account minimums. Additionally, many robo-advisors have slick user interfaces to help you get relevant information about your investment performance, holdings, and more in a snap. Here's a tip. If you're all ready to get a comprehensive, in-depth financial plan in place, you'll probably do better to sit down with a financial planner. If you have your strategy largely in place, try out a robo-advisor. It's worth a look.